Hello and welcome to the Airline Weekly Lounge. I'm your host Gordon Smith and I'm joined as usual by co-host Jay Shabat. In part 1 we're talking all things Wizz Air, and in part 2 we turn our attention to the latest developments at Spirit Airlines. Hey Jay, how's it going?
What's up, Gordon?
Doing very, very well. Your headline this week for the Airline Weekly issue was a masterclass. Even people in the wider sort of skiffed ecosystem who aren't necessarily in the weeds of aviation like we are, Jay, they appreciated it. It was, if anyone hasn't read it yet, Les Miserables, which is actually good practice because I'm off to Paris on Sunday for the air show. So,
nice.
Thank you for the crash course in all things French.
Yeah, I hope everybody got a little chuckle out of that, either that or nausea. You want one or the other. One
of the two, yeah. But this week's show, a bit of a double bill of ultra low-cost carriers. We're going to be talking about Spirit Airlines in part 2. But part 1, let's kick things off with Wizz Air, Jay, because we had the results last week as we are recording here on June the 9th. Wizz Air pre-pandemic produced Ryanair-like profit margins. What has gone so wrong? Bonus points, Jay, if you can answer the question without using the letters G, T, or F.
Can't do it.
Can't do it.
I failed your criteria already. It's that is a very big chunk of the problem. The gear turbofan engines, GTF, those letters that Gordon is referring to. If you do you remember, Gordon? I think we talked about it on the Lounge podcast. We certainly have written about it in the issue in the Airline Weekly newsletter. We talked about how if there was one airline in the world that was most adversely affected by the Boeing aircraft delivery delays, I think we said it was Lufthansa, right?
Lufthansa was definitely up there, yeah, for sure.
Yeah, we talked about how they just really need those those wide bodies really badly, and so if there is one airline in the world that's arguably most adversely impacted by the Pratt & Whitney geared turbofan engine groundings, that airline would be, fill in the blank for me.
Wizz Air would certainly be up there as well.
I would argue that Wizz Air is probably number one or real close to it. They actually have the most airplanes grounded for that reason. Other than Indigo in India has some more, but Indigo they've managed through it relatively with, I don't want to say unscathed, but they're still a very profitable airline. Wizz Air, on the contrary, it's been a really, really difficult situation for them. They have, and I have the numbers in front of me here somewhere, but it's they have a very large, something like 20% of their fleet was recently, it looks like 42 planes as of the end of last quarter that were on the ground. That's a lot of planes. And remember, this is a low-cost airline, an ultra-low-cost airline that really depends on, intense aircraft utilization and, constant expansion to get those economies of scale to keep their unit costs low. So it's really just throws a big wrench into their whole business model. And that's shown in their really lousy profit figures or loss margin figures really over the past couple of quarters. They are getting compensation from Pratt & Whitney, but they talk about it openly that it's not even remotely close to offsetting the losses that are associated with the groundings. So even if we stopped right there, we can see why Wizz Air is struggling. There are other reasons, however. That's not the only reason. They did have a large exposure to the Ukrainian market, which they had to exit for obvious reasons. We know there's a war going on there. And the same is true of the Israeli market. Wizz Air has a large presence, or had a large presence, in Tel Aviv, and they were forced to exit there as well for security reasons. So that becomes another kind of layer of trouble for them. Now, they say that, we'll talk about some of their growth prospects in a moment, but in the future, they do say that Ukraine in particular remains a market with even more potential now than it did before the war. So we'll see if they can get the, if things calm down there. Wizz Air does believe that it has a bright future in that Ukrainian market. Now, on the other hand, I've talked about some of the negative things that are afflicting Wizz Air. Their cost inflation, in terms of think about labor, it hasn't been nearly as bad as what you've seen in the U.S. That's more of a U.S. phenomenon. There's really lucrative labor contracts. There's very expensive labor contracts that carriers like Southwest, really all the U.S. carriers sign. A little bit less of a problem for a European airline like Wizz. Now, so that's a plus. Now, back on the negative side, they didn't specifically say that their joint venture in Abu Dhabi is losing money, but I think if you read between the lines, it doesn't sound good. They talk about how they've really expanded a lot in some of these Arabian Gulf markets, and these are desert climates, and I'm not an engineer, an engine expert by any means, so don't take my word for it, but apparently in geographies where you do have a lot of sand that gets into the engines, it does affect the engine performance rather significantly. And they talked about that. They call these the hot and harsh markets was Wizz Air's term for these kind of places. And it's they really talked a lot about how all this new exposure to these desert markets has really affected their engine performance and in turn their overall operations. So they're starting to kind of pull back on a lot of that now. It does make you wonder, they're out of Ukraine, they're out of Israel, they're reducing their exposure to some of these other Middle Eastern desert markets. Are there, and they do have, hundreds of planes still on order, large planes, A321neos with, more seats than I was looking. Wizz Air has more seats on its A321neos than American does on its B787-8. So there's a lot of seats to fill. Yeah, a lot of seats to fill. So the question is, will they ultimately have opportunities to deploy all these planes? And they say yes. They say that I already mentioned one of them, Ukraine. They think that's going to be a big market in the future.
Well, going back in 6 weeks. They say, I should clarify that, 6 weeks of getting the regulatory green light after the end of the war, or at least a lasting ceasefire of sorts. But yeah, they were very bullish in the investor presentation, Jay, which I'm sure you saw last week as well. They said within 6 weeks they would get aircraft back in 30 routes inbound. They won't be basing aircraft there initially, but by the end of year one, after coming back into the market, Wizz wants to see locally based aircraft with up to 60 routes on sale from the country, providing around 5 million seats per year. And then by year 3 of re-entering the market, Wizz is aiming for 150 routes, providing around 15 million seats annually. That's if you believe the PowerPoint deck.
Yeah, it's a big opportunity if what they say, like you said, if you believe what they say. Now, Ryanair is also pretty bullish on Ukraine. And they say, it's an interesting comparison they made. Wizz Air said that Ukraine was sort of like Poland was 20 years ago. Poland was a market when Wizz Air first entered where you had a lot of migrant labor traffic flowing to London, for example. Poland is now has matured a lot. I mean, Poland has their economy has just grown enormously in the past 20 years. And there's now Wizz Air is enjoying more of a sort of that middle class outbound leisure demand from a place like Poland. Whereas Ukraine, they say, look, it's going to be, there's going to be a lot of people moving out, in and out as the country reconstructs itself, rebuilds infrastructure after the war. So they really think that it could be sort of another Poland, so to speak. And yeah, that remains to be seen. But for what it's worth, Ryanair believes essentially the same thing. So yeah, there is that. They do have, of that very large order book they have of all A321neos, by the way, is almost 400 of them. They do have 47 of those are supposed to be the extra long range XLR versions. Now they intend. It seems like they intend to cut that back a little bit, and one reason is that a lot of those XLRs were intended for some of these Middle Eastern routes that they're less perhaps keen on nowadays. However, they are still very keen on reaching India, and they won't be able to do it so much from kind of Western Europe, London, but they do want to serve India very much from Eastern/Central Europe, and maybe even turn a market. They didn't mention one, but what comes to mind from me would be a market like maybe Warsaw or Budapest. Kind of turn that into a connecting gateway between Western Europe and India. We'll see if that works out for them. But in their mind, that is an opportunity for growth. They do say also, just more generally, that Central Europe, Eastern Europe, just has a lot of room to grow. These economies are still not as mature as some of those in Western Europe, and they just see a lot of. They say they're performing well right now, and they'll continue to grow in the future. So that's they remain bullish. They'll admit now, and they didn't they weren't saying this until recently, but they'll admit now that things with the the GTF issues and sort of the financial situation getting back to strong profits, that it'll still be another year or two before that happens. They're talking 2027 before Wizz Air looks like the Wizz Air of the past. They'll admit that if it ever does. But eventually, if they're right, then they'll they do say that the opportunities are there to grow.
And Jay, just looking at some of the Western European markets, they're very big in the UK and Italy, they're pretty big, parts of Iberia as well. Not so big in France and Germany. Did we get any color from them during the investor call last week about why they're pulling out of some of these big German markets, for example?
Yeah, well, it seems like everybody's pulling out of Germany. It's just a market that, and while you're talk here, I'm just pulling up some of their I'm looking at Cirium Dio, and I'm pulling up some of their capacity trends by market. But yeah, Germany, it is a market that's just a lot smaller now today than it was pre-pandemic, and a lot of that has to do with just much higher airline taxes, airport fees. Germany was always kind of a big business market, and a lot of those business type routes suffered as people, more people worked at home and things like that. So it's just, I think that's a phenomenon that goes beyond just Wizz Air. Even Lufthansa itself has had to pull back a lot in some of its, German routes. So I think that's the answer there. They said more generally that Western Europe is kind of a mature market. Doesn't really need that much more capacity, so they're very much have their attention more on Eastern Central, which is their core, the core of their network. By the way, I do have the Cirium data in front of me here. In the upcoming third quarter, Wizz Air's largest market by seats will be London Luton, which that's been true for a long time for them. They've always big there. So they are big over there in very Western Europe. However, a lot of that London traffic is Eastern Europeans going back and forth to London. A lot of, there's the old, is the Polish plumber. Have you heard that one, Gordon? The kind of the stereotypical immigrant worker in England, Poland. And that's probably less true than it was in the past, but a lot of workers like those kind of manual jobs, like plumbers. The UK sourced a lot of its labor for that manual labor from areas of Eastern Europe. So Wizz Air has exploited that. But then beyond London, you do have Budapest as their second busiest market, Bucharest, then Rome, and then you have Tirana, Albania, which is kind of a up-and-coming hot tourist market. Then you get into Warsaw and Milan. I'll stop there, but you get a sense of where Wizz Air is large.
Yeah, and what about Indigo Partners, Jay? Because they're, for those that aren't familiar, they're an American private equity firm, and they've got a controlling interest in quite a few low-cost carriers. US listeners probably know Frontier Airlines best, but also in South America, JetSmart, Volaris, I think, but also Wizz Air. Do we know the specifics of the order? Could, if we're seeing a little bit of softness at Wizz Air, could Indigo Partners or the controlling firm divert some of those aircraft maybe to better performing parts of the broader business?
Yeah, I suppose that's possible. There's also Frontier. I'm not sure if you mentioned that one, but that's one of the bigger airlines in the Indigo portfolio of carriers. So I suppose by ordering jointly like that, as they did, that is an option for them. We'll see if it comes to that. Wizz Air did say that they are adjusting their order book with Airbus to not cancel any aircraft deliveries, but they are going to change some of the delivery dates, push them back a little bit. Yes, that is an option that they probably have, is that they can move some planes around. However, Gordon, it's not as if Frontier is bursting with growth opportunities. And the same is true of Volaris in Mexico, which is they have deep problems of their own. The Mexican market is not healthy right now. And JetSmart is a very small airline, so there's not a whole lot that they would be able to absorb. So I'm not sure that would be anything beyond maybe a solution on the margins, let's say.
Not moving the needle much, Jay.
Not moving the needle much.
Thank you for that Wizz Air insight, or Whiz through Wizz. And if anybody does want to go into a bit more detail about the various challenges, but also the solutions being presented by Wizz Air management, do check out the most recent issue of Airline Weekly for Jay's analysis there. We'll be back in part 2 very shortly, discussing Spirit Airlines. I'm sure some of the themes that we've discussed in part 1 will come a cropper there again. Before that, just a quick reminder to send any questions or comments that you might have for us to podcasts at skiff.com. That's podcasts with an S at the end. And please don't forget to follow or subscribe to the podcast wherever you are listening or watching. And if you are enjoying the show, please rate us 5 stars or leave us a positive review so we can continue to spread the word about the Airline Weekly Lounge. Don't go anywhere. We'll be right back. Hello and welcome back to the Airline Weekly Lounge. I'm Gordon Smith, joined as usual by co-host Jay Shabat. Part 1 we were discussing Wizz Air. We are whizzing across the Atlantic now to discuss Spirit, Jay, because we finally had the financial numbers for the first calendar quarter from them. Tell our listeners what they need to know.
Well, I don't know how the weather is in Lisbon this morning.
It's red hot.
Monday.
It's too hot.
Okay.
Yeah, I would have my air conditioning on, but it's a little bit noisy. So I hope all of our listeners are appreciating the quiet, crystal clear ambience that you're getting, because I am suffering by not having the AC on in the room I'm recording this. But yes, it's hot. That's the short answer.
Well, it's rainy and gray and chilly here in New Jersey, and it's kind of the perfect backdrop for talking about these two gloomy airline situations, one being Wizz Air and one being Spirit, which was at least as gloomy as the Wizz situation. They, during the first quarter, they just published their figures, by the way, just recently, a little bit later than everyone else, but they did just come out of bankruptcy after all. And their operating margin for the first quarter of 2025 was, cue up the sad music while I check it here, negative 29%. So it's just real awful quarter. And that's stripped out some of the, any kind of special items related to the bankruptcy restructure. That's a pretty clean number, negative 29%. Yuck. So what is going on with Spirit? We can start with those same 3 letters, GTF. They have those same Pratt & Whitney issues too. A lot of their big portion of their fleet has been grounded over the past year or two. So that's been real difficult for them. And I would just, not to beat a dead horse, but a reminder again that these ultra low cost carriers, they really depend a ton on just keeping those planes in the air and growing. That's how they get the economies of scale to maintain their and improve their low unit cost. And that's it becomes especially important for an airline like Spirit, which has experienced so much non-fuel cost inflation. I got some numbers for you, Gordon.
Go ahead. I love numbers, Jay.
Okay, and these numbers alone might you could end we can end the discussion after this. You'll know why Spirit is having trouble. So between compared to the first quarter of 2019, Spirit experienced a 53% increase in unit cost. So that's Q1 19 versus Q1 2025. Now, remember, they've been having a little bit of a fuel holiday of late. The fuel prices have been nicely down, comfortably down. Excluding fuel, non-fuel CASM is up for Spirit 70% over that period.
Ooh,
so
ouch.
yeah, you're talking about. So now this is not uncommon for U.S. airlines. You'll see figures like that for United, Delta, whoever. I don't know what those figures are off the top of my head, but they're
but there's everything else that's going on.
They're in the neighborhood. The difference is that if you're American or if you're United or Delta, you're getting revenue premiums too. Your unit revenues are increasing a lot as well, and in some cases, I don't know if by even more, but pretty close to matching that non-fuel CASM inflation. Whereas if you're some of these low cost carriers, Spirit being one, it's just been it's the cost inflation is just so far outrun your revenue gains. And so they're going to have to find a way to either get their costs down or look for new ways to raise revenue. Now, during bankruptcy, frankly, they didn't do a whole lot to address their operating cost. They dealt mostly with their financial costs. They restructured their, debts to bondholders, to banks, wherever. But they did not, rip up labor contracts. They didn't rip up any, supplier contracts. So they still have what's probably a relatively, high cost base, and that's, depending on what you're comparing it to. But they'll tell you that they still have, a rather healthy cost advantage and unit cost spread with some of the big guys, with the Uniteds of the worlds, Deltas of the worlds. But is it enough? One thing, they're about 23% small. The third quarter seats are down 23% year over year. So they're a lot smaller now than they used to be. So you can imagine what that does for, negative economies of scale. They're also they're chasing markets at some pretty they're chasing business in some pretty strange places. If you look at, and I'm eyeballing the numbers from Cirium again. If you look at the third quarter, pretty much every single airport they serve is down. Their seats are down year over year. The only two exceptions among their bigger airports are Detroit and Atlanta, so two Delta mega hubs. I don't know, if they detect any vulnerabilities with Delta or what their motivation is there. But is this an airline, no matter how, despite their changes and their adoption of, more premium fare products and services, is this an airline that can really succeed taking on Delta in their fortress hubs? It kind of feels to me like if Spirit is ultimately going to get their groove back, they're going to have to find a way to grow in Florida again. I mean, Florida is the bottomless pit of airline demand. As long as you the trick is you got to get your unit costs really low because people are not going to pay. But if you can get your fares low enough and still make money, then Florida you'll fill your seats. So, and I say Florida as a metaphor for also, Caribbean, Phoenix are also in that category.
Sure.
Markets like that. So that's gonna, but can they do that? It's gonna be tough. So they have a new man in charge, who recruited from Sun Country. Interestingly enough, Sun Country has been so successful. You kind of wonder if a lot of their executives won't be poached over the the coming years. You wonder even if their CEO Jude Bricker has a future, running Southwest or even American or something like that. That's totally just my mind, running wild there.
I'll back you in that wild speculation, Jay. I think
kind of feels like there's potential there.
He's
right?
got mileage.
Yeah. So, who knows? But you think those Sun Country execs are kind of a hot commodity among headhunters, you'd imagine. Certainly true in this case where Spirit recruited Dave Davis from Sun Country. So he'll have his work cut out for him. He'll, like I said, I think it's going to be very important for them to find any which way they can to grow again, to get their unit costs trending downward again. They also want to beef up their loyalty program, which, that's one thing that sort of the muscular revenue guys like Deltas and United, those guys have all that loyalty revenue coming in to offset some of that cost inflation. Spirit doesn't really. Their loyalty program is pretty thin, pretty weak. So I think that's going to be a priority. They said before, during the bankruptcy process, the prior management said that they were looking for co-chair partners, maybe, join some kind of, alliance or who knows. But they're clearly looking for new ways to garner new revenue. We'll see if they're able to do it. Good news, I guess, for them is that again, fuel is pretty cheap right now, so helpful.
Helpful for sure, Jay. Just trying to string together our various discussion points in this episode. How much of Wizz's and Spirit's current pain, and separate the two of them if you need to, is self-inflicted through overambitious growth, and how much of it is just bad luck? The GTF engines, inflation, softening demand. If you had to weigh up both of these cases, what would you say?
Yeah, that's tough to say. I think you do have to be fair that the GTF issues in both of these cases are very, very serious. This is not just one problem of 100. This is a real big one. So maybe cut the management team some slack there. In terms of did they overexpand? Did they order too many planes? Those planes are very valuable. One thing that Wizz Air has been able to do with all these plane deliveries is they've been able to sell them and lease them back and collect a handsome profit from that. That's helped their balance sheet from being worse than it otherwise would. This was an investment grade airline at one time. Now, did they? Is that expansion going to cause them problems in the future? Are they going to? We talked about how all those Wizz Air planes, can they find enough opportunities for all those planes, and they're big planes too. Spirit has they have a lot of A321neos as well as big planes. Maybe time will tell. But again, it is important to note that the planes that they did order are extremely valuable, and they got good prices for them, presumably. So, assuredly. So it's not like they bought an asset that's that's like, what do I do with this thing? They could always sell it. They could always lease it. So I'm kind of beating around your question, but in general, I think it's just a combination of bad luck and developments that look, running an airline is not easy, even for even in good times. So we won't fault anyone. Perhaps since you got a gun to my head, you won't let me out of this, I know, Gordon. So if you force me to cite one quote unquote mistake here, maybe I'll say that Wizz Air probably shouldn't have been so aggressive in the Gulf region. Would you buy that?
I think it depends on your definition of the Gulf region, Jay.
Specifically,
I quite like the look of Saudi as a market, and I think they're putting the XLR into some of the secondary cities there. I think direct from London, which I think is a smart move. They're underserved, especially on non-stops on a price-sensitive market. I think that sort of makes sense to me, especially if you've got the equipment coming. The various other investments in that part of the world, I'm not privy enough to know. I know the partnerships and they're a little complex. I don't know enough about the individual profitability of, say, the Abu Dhabi joint venture to be able to assess whether that was a shrewd move or not. But
I'm going to say no.
I'm going to say no. Well, I did quite enjoy just the fact that you could do Wizz Air all the way to the Maldives from, say, the UK by stopping off in Budapest or Bucharest and then going down to Abu Dhabi and then down to the Maldives. I think you probably still can do that. If you correct me if I'm wrong, podcast@skiff.com. But I think a little bit of overexposure to that market has hurt them, and I think Ryanair and EasyJet are also just both very, very fortunate in that they haven't had the same degree of disruption to their operation. Ryanair will tell you all about the MAX woes and delivery delays and things, but it's not nearly to the same extent. And EasyJet, of course, they've had some minor issues with their newest aircraft, but not nearly to the same degree. So their two largest competitors, never mind the legacy players, really having been able to navigate the worst of the post-pandemic woes without having the same extent of troubles as Wizz, I think has been putting them maybe a very unfair contrast.
I agree with all that. I think that's everything you said is fair.
Fair. Okay, that's what we look for. Fair and balanced. I don't know whose tagline that is. Maybe a certain Fox News. But on that note, we will briefly conclude. Jay, any clues as to what might be in the next issue of Airline Weekly for our regular readers?
We got an early start this week. Work is underway on a feature story about Virgin Australia.
Ooh.
They are going back to the stock market. They're working on an IPO for later this month. And remember that they only recently sold a big chunk of themselves to Qatar Airways. So
they got anything left to sell?
Yeah, well, they're going to have they're going to have multiple owners, which is not unusual for them. If you'll remember back years ago, they were owned by a bunch of different airlines. What do we have? Singapore Airlines and Etihad, and who else was involved in them? A couple of different airlines. So that's nothing really too new, but they do have a stake that will be floating on the Sydney Stock Exchange, I believe, pretty soon. So the nice thing about that for us analysts is that when an airline goes public, they throw a whole bunch of information out there for investors that we can diligently pore over and analyze. So we'll have a lot to say in our next issue.
Sounds good, Jay. Look forward to it. And just goes without saying that I will be at the Paris Air Show this coming week, depending on when you're listening to the podcast. I'll be there Sunday through Wednesday. So if you do spot me running around, depending on it can get very, very hot in Paris. I seem to remember a couple of years ago it was absolutely sweltering. If you do see me running around at varying degrees of dehydration, then do say hello. Always nice to meet the public.
How do you say "I need water" in French?
Oh, je voudrais. I never know how to pronounce. I speak Spanish, not French, just in case.
We're gonna turn this podcast into like a Duolingo. Is that what do you call that?
With the talking owl.
Yeah. Okay. Yeah. No, I never used it, but that's. We'll come to the Airline Weekly Lounge for your language learning needs.
I would take your analysis of the airline market any day over your linguistic recommendations, Jay. But I just didn't want anyone going away.
I'll take that as a compliment.
I didn't want anyone going away from this episode thinking, "Oh my, Gordon only speaks English." Sort of classic Brit. Just expecting the world to speak his language. I do speak Spanish and I'm learning Portuguese. French, I've never really attempted. And I know the word "je voudrais" for "I would like," but the word for water. I don't know how that's pronounced.
Yeah.
Can you help me?
Well, I embarrassingly lived in France and studied in France, and I still don't speak French. I can read it, but I can't speak it. I lived in China. I can't speak Chinese. I've lived briefly in Spain. I can't speak Spanish, so I'm just awful at languages.
Well, you can speak fluent investment reports and earnings reports.
Yes. I'm not bad at business English. Yeah, I do have trouble understanding when you start talking in Scottish, but I'm working on that.
We digress. Thanks to Jay for that interesting analysis of both Wizz Air and Spirit. More detail as always at airlineweekly.com. If you're not already a subscriber, go to airlineweekly.com/subscribe. And don't forget, you get all the airline news on skift.com, plus Skift researches airline reports. So loads to get your teeth into. And thanks as always to our producers, Doug, Monica, and Cole. And wherever you are in the world, thanks for listening, and we'll catch you next time. Bye for now.
Whether you're listening to us on Spotify, Apple, or wherever you get your podcasts, please make sure to subscribe, rate us 5 stars, or leave us a positive review. This really helps us get the word out about the Airline Weekly Lounge, so we can continue to bring you this podcast every week, absolutely free of charge. And if you're watching us on YouTube, make sure to subscribe to the Skift channel and hit the notification bell to find out whenever a new video drops.